Would you risk all of your savings to make a fortune? Are you afraid to lose it all? Well, you don't have to. So, you've got $100,000. Now what? Stocks? Crypto? Real estate? Too many options. Too much noise. What if, just what if, there was a way to grow that money without obsessing over every market move? Without checking charts at 2 a.m., without feeling like you're gambling your future? There is, and it's ridiculously simple. Fidelity Index Funds. They don't just track the market, they are the market. No stock picking, no guessing games. Just steady, long-term growth spread across hundreds, sometimes thousands of companies. And if you play it right, that $100,000 could turn into something massive. In this video, I'm breaking down 7 of the best Fidelity Index funds for a 100K investment. The ones with strong performance, real growth potential, and the power to make you money while you sleep. No fluff, no nonsense, just straight up facts. Chapter 1. Why Fidelity Index Funds? So, why Fidelity Index Funds? What makes them a smart move? Let's break it down. First of all, low fees. Actively managed funds, they love to charge high fees, slowly eating away at your profits. Fidelity's index funds, some of the lowest fees in the industry. More of your money stays where it belongs, invested. Secondly, diversification. Why gamble on one stock when you can own hundreds, even thousands at once? Spreading your risk like this makes your portfolio way more stable over the long haul. Thirdly, historical performance. The S&P 500, which many of these funds track, has averaged around 10% per year for decades. That's the kind of compounding growth that turns thousands into millions over time. And the best part? Simplicity. No stock picking, no staring at charts, no stress. You invest, hold, and let the market do its thing. In this video, we're diving into 7 of the best Fidelity Index funds to put that $100K to work. We'll break down what they track, how they've performed, and how they can build your wealth over the years. Chapter 2. The 7 best Fidelity Index funds for a 100K investment. Alright, let's talk about where to put that $100K. We're not just throwing darts at a board here. These 7 Fidelity Index funds, they've got proven track records, ultra low fees, and serious long-term growth potential. Some are all about stability, others lean into high growth, and a few offer global exposure. But every single one has a role in a well-balanced portfolio. Let's break them down one by one. Number 1. Fidelity 500 Index Fund, or FXAIX, the market leader. This is the fund for those who want a simple, powerful investment. It tracks the S&P 500, meaning you own 500 of the biggest US companies. Apple, Microsoft, Amazon, all the giants. Why it works? It has ridiculously low fees, 0.015% expense ratio. It offers solid historical returns, around 10% per year on average, and it is diversified across every major industry. Now let's do some quick math. If you drop $100K into FXAIX and let it sit for 30 years at a 10% return, that could turn into $2 million. This is the set it and forget it foundation of many portfolios. But what if you want even more diversification? Let's move to the next one. Number 2. Fidelity Total Market Index Fund, or FSKAX. The broad approach. FXAIX tracks just the biggest 500 stocks. But FSKAX, it gives you the entire US stock market, over 3,000 companies. That means you are getting exposure to small and mid-cap stocks for extra growth potential, A wider net, more industries, more opportunities. And still dirt cheap. 0.015% expense ratio. Over the past decade, it's actually outperformed the S&P 500, averaging about 10.5% annually. Same calculation, if trends hold, $100K could turn into $1.9 million in 30 years. If you like the idea of owning everything instead of just the big names, this is your fund. But what if you want even higher growth? That's where the next one comes in. 3. Fidelity Nasdaq Composite Index Fund, FNCMX, the tech heavyweight. If you believe tech is the future, listen up. This fund tracks the Nasdaq Composite, meaning it's heavily packed with Apple, Nvidia, Tesla, Google, Amazon, basically the biggest tech innovators. Why that matters? It is no surprise that tech has outperformed the S&P 500 for decades. Higher growth potential, but yes, more volatility. 10-year average return is at a whopping 14.5%. Now, let's dream for a second. At a 14.5% return, $100K in FNCMX could grow to over $6 million in 30 years. Yes, tech stocks swing up and down like crazy, but long-term, they've been a gold mine. Number 4, Fidelity Midcap Index Fund, or FSMDX, the growth sweet spot. Let's talk midcaps. These companies aren't massive like Apple or Google, but they're not tiny startups either. And here's the thing, midcap stocks have historically outperformed large caps over time. FSMDX is a pure midcap play, and it brings faster growth than large caps, but with less risk than small caps. 10-year average return sitting at 11%. That means a $100K investment here could turn into $2.5 million over 30 years. Midcaps don't get as much attention, but they're a sweet spot for balancing risk and reward. Number 5, Fidelity Small Caps Index Fund, or FSSNX, the risky high-growth play. This one's for those who can handle the roller coaster ride. Small cap companies grow fast, but they also swing like crazy. Why FSSNX stands out? It has nearly 2,000 small cap stocks for built-in diversification. Higher risk, but higher upside. 10-year return is at a decent 10.1%. If history repeats, $100K could become $2.2 million in 30 years. If you can stomach the volatility, small caps have serious long-term potential. 6. Fidelity Global X US Index Fund, or FSGGX, International Exposure. The US market is strong, but it's not the only place to make money. FSGGX invests outside the US, giving you exposure to companies like Toyota, Nestle, and Alibaba. Why go global? For one, it diversifies your investments beyond the US. International stocks are undervalued right now, which means higher potential returns. 10-year return is at 7.5%. If you put $100K there, you're looking at around $1.5 million in 30 years. If you want to hedge against the US market and capture global growth, this is a smart addition. Number 7, Fidelity US Bond Index Fund, or FXNAX, Stability and Protection. Let's be real, not every dollar should be in stocks. Bonds are the safety net. FXNAX tracks the US bond market, making it a low-risk, steady income option. Why it matters, you may ask? It offers much lower risk than stocks, pays consistent interest income, 10-year return is 2.5%. Now, $100K in bonds won't make you rich. In 30 years, it might grow to $250K. But that's not the point. Bonds balance out stock volatility and protect your portfolio in market crashes. Every investor needs some stability. wrapping up. So there you have it. 7 powerhouse Fidelity Index funds covering large caps, FXAIX, FSKAX, tech and high growth, FNCMX, mid caps, FSMDX, small caps, FSSNX, international exposure, FSGGX, and bonds for stability, FXNAX. Different funds, different strategies, but all of them have one goal: to grow your money over time. Chapter 3. How to split your $100K for maximum growth and stability. All right, we've covered the best Fidelity Index funds. Now comes the big question. How do you allocate that $100K? Because here's the deal. Throwing all your money into just one fund? That's like putting all your chips on a single number in roulette. Risky. Instead, a smart portfolio spreads risk, maximizes returns, and keeps you balanced through market swings. So, here's a solid approach. Start with a foundation, 40% into FXAIX, the S&P 500 fund. This is your steady, long-term growth machine, tracking 500 of the biggest US companies. If you're investing for the long haul, this is a no-brainer. Then, 20% into FNCMX, the NASDAQ fund. Why? Because tech has been the growth driver for decades. Higher risk, sure, but also higher rewards. Next, let's balance things out with 15% in FSMDX, mid-caps. These aren't massive corporations, but they're not tiny startups either. They're in that sweet spot, big enough to be stable, small enough to grow fast. Want even more upside? 10% in FSSNX, small caps. Higher volatility, but historically, small companies have outperformed over time. If you're in this for the long game, small caps can be a great addition. And let's not forget global exposure. 10% into FSGGX, the international fund. The US isn't the only place where money is made. Companies in Europe, Asia, and emerging markets offer huge opportunities, and they're often undervalued compared to US stocks. Finally, 5% in FXNAX, the bond fund. No, bonds won't make you rich, but they will provide some stability during market downturns. Now, here's where you can tweak things. Want more stability? Increase your bond allocation. And if you want to go all in on growth, put more into tech and small caps. This allocation gives you diversification, strong returns, and a solid defense against market volatility. Chapter 4. Conclusion. So, there it is. 7 of the best Fidelity Index funds, and a smart allocation strategy to turn $100K into something far bigger over time. No gambling, no chasing the next hype stock, no stressing over every market dip. Just passive investing at its best. Because here's the truth. Time and consistency beat everything. Stick to the plan. Let compounding work its magic. And years from now, you'll be glad you started today. Now, I want to hear from you. Which fund stands out the most? Drop a comment below. And hey, if this helped, hit that like button, subscribe, and keep building your future. Happy investing!